Anil Gupta, Vice President at ICRA, for a view on this. Anil, thanks for joining us. Firstly, 41,000 crore, I'm still a little confused about whether this is over and above the 2.11 lakh total. Is that your understanding?
Yeah, hi, good afternoon. So if you look at the total recapitalization plan, which has been going since last few years, so there was around 75,000 crores which was announced by the government under Indradhanush, and subsequently 2.11 lakh crores which was announced during October 2018. So of that 2.11 lakh crores, 1.55 lakh crores was the government share, and balance 58,000 crores was required to be raised by the banks through market raisings. But what has happened is government has stick to its share of 1.55 lakh crores, which included recapitalization bonds of 1.35 lakh crores and 20,000 crores which was pending under Indradhanush. But the 58,000 crores which was required by the banks to be raised, that has not materialized in the current financial year. So effectively, if we look at the 41,000 which is being announced today, is nothing but to plug the shortfall which has happened because the banks were not able to raise capital from the markets.
Okay, so Anil, just to clarify that, so we had that 70-odd thousand which was under Indradhanush, and then 15 or so of that was 18, I think, was taken ahead into the 2.11 lakh crores. So if one looks at total recapitalization, it would be closer to say 2.5 to 2.6 lakh crores since 2015.
Yes, so since 2015, what we can say is 75,000 crores was under Indradhanush and 1.35 was recapitalization bonds. So that makes it 2.1 lakh crores, and additional 41,000 today, that will make it to 2.51 lakh crores under all the schemes from Government of India. In addition to that, there has been capital infusion through LIC and as well as the QIP issues which would have been done by the banks during last 3-4 years. So in total, government has going to put in 2.51 lakh crores in 3 tranches, whether you call it the Indradhanush or you call it recapitalization bond and these additional recapitalization bonds, 2.51 lakh crores.
Okay, interesting. That's an important clarification coming on what this entails as far as bank recapitalization is concerned. Anil, just one broader question about the fact that they're going to be raising or at least wanting or asking Parliament's approval for 86,000 crores. That includes infusion into Air India. What have you made of the broader plan of asking for more grants?
So Air India infusion and all that, I'm sorry, I'm not aware of. But what I can talk about is the bank recapitalization. See, what we can say is that of the total 41,000 crores which is being planned, the government was already having 42,000 crores left from the budgeted capital for the current financial year. And as per our estimate, the government could have managed the bank capitalization to the 42,000 crores capital which was left. But because they possibly want to take certain banks out of PCA, so they are putting in some more capital into the PCA bank. So as per our estimates, it can be the overall 41,000 crores which is coming, it can be skewed largely towards few banks which the governments want to take out from the PCA and will not be equally distributed.
Anil, so I mean, taking this new money into account, where do you think that will leave us at the end of the year in terms of capitalization levels? It'll help, but they'll still be sort of at the bare minimum, if not some still below that.
Yeah, so what we think is that because there will be a slightly higher share of capital infusion towards certain banks, we will see certain banks which currently may be under PCA may come out of the PCA by having a capital ratios much superior than what is required to be included in PCA framework. But there can be certain banks which will continue to remain under PCA because overall capital 41,000 crores is not sufficient enough to take out all the banks out of PCA. So if you have to take out all the banks out of PCA, the capital quantum is much higher. As per our estimates, the total net NPAs of these PCA banks was around 1.5 lakh crores and 11%. So if you have to reduce it to 6%, you require around 65 to 70,000 crores additional capital to take all the bank out of PCA, and this is not including the IDBI Bank, which is being separately addressed through LIC.
Anil, help us understand, if one has to look at what this capital has yielded for the government in some ways, we all said this was an unprecedented amount of recapitalization done by the current government. How does one understand that? Should one look at the return on equity, say that it continues to be low? So in many ways, the money that is being put in is giving very little returns to the government or to the economy.
So it is not yielding any returns, definitely, and it is a cost to the government because they have to pay the coupon on these bonds. And last year, the coupon was somewhere around 7.6%, what I can broadly recall. So it is going to be a cost, and we must not forget the return on equity which the government has foregone because these banks made losses during last 3 years, and the dividend which could have come to the government instead of the cost which has come to the government. So there is a opportunity loss which has happened apart from the actual loss which is going to happen in terms of the coupon payments which are going to happen on these bonds in subsequent years.
Okay, for the banks that are scheduled to get some of these funds, Anil, what happens to them? I mean, would this make them strong enough to go and raise further capital if they need from the market that they could not before this?
Can you repeat that question?
I said for those banks who get a part of this capital, at least of this 40,000 crores, some of these banks are going to get a part of this capital. Would this be enough for them to go and raise further capital from the market? Would that strength be arrived at?
Yeah, so definitely with this capital, if it comes in, the banks will be able to sizably reduce their net NPAs, which will provide visibility on their future earnings as well as their growth. And definitely that should lead to a better equity multiples for the banks, which should enable investor interest also. Like nobody will like to put in a capital which is going to be consumed towards setting off of the losses. So as the banks turn to the profitable path, definitely their ability to raise capital from the market shall improve. And we should see that happening in FY20.
All right, Anil, thanks so much for talking to us. So we've got some clarity on the recapitalization, 41,000 crore in additional bonds. But as Anil helped us understand, probably part of that 2.11 lakh crore, so just the money that was supposed to come from the markets will now come from the government.